Ron Siegel Radio, your home and mortgage connection.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots, you know, the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. But before we get into our intriguing content today, please join me in welcoming our featured guest and first timer on Ron Siegel Radio. Yes, we have got Scott Hauser with us. Welcome.
Thank you. Thanks for having me.
Glad to have you with us. Nate, let me remind you, if you ever have any home or finance related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan, a plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference. 800-306-1990, 800-306-1990. And yes, of course, we are celebrating today. I guess we'll get the serious stuff first. Happy birthday to the United States Air Force. Today is their birthday, and we applaud every single member of our United States military, our Air Force. Bunch of real special people. And as I say often, if it wasn't for the men and women of the United States military, you and I couldn't have all the freedoms that we enjoy in this country. So thank you to our armed forces. Happy birthday to the Air Force. And now now, yes, I have beaten anorexia. Take a look at what we're celebrating today. Today is National Cheeseburger Day. Okay, I can go for a cheeseburger. Could I go for a cheeseburger? Of course I could go for a cheeseburger. Where are you going for a good cheeseburger? What do you like on your cheeseburger? Now, for some reason, I guess they don't have power in Vegas, so Josh is not with me right now. But here's the issue: is we put on there a question of the day if Josh was with me. So, what's your favorite toppings on a cheeseburger? What are you putting on there? So, give me a beef patty, give me some ketchup. Maybe a little mustard for flavor, grilled onions, and of course, everything's better with bacon. I'll throw a little bacon on there. If I'm in a wild mood, might throw a little guacamole on there. But so, Scotty, are you a burger guy?
I am a burger guy.
What's the toppings?
I would say grilled onions. I love mustard. I don't know too much about ketchup, but mustard. And then throw a little bit of lettuce and tomato, and pretty simple.
So you want a salad with your burger? Yeah, I talk to people all the time, and I just not a salad guy. A salad, give me a salad, it's okay, but even that I have trouble with since my bariatric bypass. But just on my burger, give me a burger and the good stuff. But hey, to each his own. Do you have a good go-to place to get a good burger?
Well, I used to work at the Cheesecake Factory, and they make a heck of a good burger. Besides that, though, I would say In-N-Out. Can't go wrong with an In-N-Out.
So Cheesecake Factory, is that on page 87 or something? With how long does it take somebody to learn the menu at In-N-Out? I mean a cheesecake.
I would say weeks. I was there for 13 years, and I still didn't know the menu, honestly.
Is that the commercials? Been the pages with all the commercials, or is that just the Yeah, but I digress. Yeah, and yes, so you can tell that I know way too much about restaurants. But I digress. Hey, let's take a look and see what else is going on in the world today. We've got the markets. Do we want to see the markets? Now, once again, we've got this problem, but for those of you that were listening to me yesterday, and if you were not, shame on you, but I shared with you yesterday, and this was at our regular broadcast time, 9 to 10 is when we record the program. If you're listening to us on ABC in the afternoon, we record 9 to 10. You can catch us on all of our socials. You can even put comments. I do take hecklers. Somebody had some very choice words for us yesterday. We had to remove them because this is a family show. But I said yesterday that the Federal Reserve was going to drop by 0.25%. They did. And I also told you that the mortgage-backed securities and the 10-year Treasury, the yields on both of them were going to go down. They were going to go against what the Fed said. And sure enough, my predictions were correct. So I said the 10-year yield on the 10-year Treasury was going to go up. And the bond price of the 30-year mortgage-backed security, that was going to go down, which meant the yield on that one would go up. Well, lo and behold, guess what happened? Exactly as I forecast. I almost hit the numbers right on the mark too. If you watched yesterday, I said that I thought the mortgage bond would go, and at the time it was about 101.20. I thought it, after the Fed commentary, would go down to about 104, 106, maybe to 100.95, and it went to 101.06. So just throwing that out there for you if you want that forecasting. Why did I know that? Well, because I've told you many, many times my opinion of Jay Powell, and I am correct.
Such an idiot. Such an
Yeah,
idiot.
he doesn't know what he's doing, or he's intentionally misleading people. I'm not sure which it is, but it's one of the two, and I'm starting to lean toward the latter. Why do I say that? Well, those of you that are like me that have no life, you might have been watching the press conference following the release of the Fed minutes. And that went from 11:30 to about 12:20 California time. What did Powell say that reinforced my idea
Such an idiot.
that he's an idiot?
Such an idiot.
Or maybe nowadays that, something.
I got a bad feeling about this.
Yeah, he may be even worse. What he said was he knew in advance that the labor market was worse than what was being broadcast. Now, if he knew that in advance, why hasn't he done something about it? Why didn't they lower the Fed funds rate at the August meeting? Why did they only go to 0.25 point at the September meeting? Because he's late on everything. I swear that if he was a female, he'd probably be pregnant and wouldn't even know it because he's late so much. But that's a different story. But the bottom line here is the guy just doesn't know what he's doing. And I shared with you yesterday that if he only went with 0.25 point, and we knew he would because Nick Timmerhouse told us that he's the Fed mole. If he only went with 0.25 point, well, what was going to end up happening was the market was not going to be very happy with it and was going to reverse course. Guess what happened? The market wasn't happy with him and reversed course. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, maybe you're not going to like what I have to say about this one either. We're going to talk about healthcare insurance. But you know something? You can't make an informed decision if you're not informed. So we bring the experts in to talk about it. And so we'll get some education here. Do you know how much your house is really worth? We'll get education on that and more. Reach me anytime. Off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, shame on you. But the replay is available. Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? Are you earning a safe, secure 10+% return on your investments? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564 Complete a 3-minute complimentary survey and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564. Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Are you like many of your neighbors trying to figure out how to pay off your debts so you can retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less? All without having to spend more each month than you spend right now. Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis. rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
Are you paying rent because you cannot afford to live in your dream home? Are you paying rent because you don't believe you have the down payment funds to purchase your own home? At Siegel Lending Team at ronismylender.com has up to $25,000 to help qualified people purchase their own home at amazing interest rates. Contact the Siegel Lending Team today at ronismylender.com. Again, ronismylender.com. Licensed under NMLS 217037. ronismylender.com.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452. You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by rsrlinks.com/mobile app. rsrlinks.com/mobile app. And every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry. Calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. They do not tell us point paid, points received, or the APR. They only tell us the number you need to put in your mortgage calculator to figure out what your principal and interest payment will be. And as I suggested to you, this is the one time that green is not good. Because if you look at the screen, if you're watching us on ronsiegelradio.tv, any of our socials, or the ABC News and Talk, AM 1490, FM 98.1 video feed, you are seeing a lot of green arrows, which means mortgage rates all across the board were up yesterday. Conventional 30-year fixed, 6.195, that was up. Jumbo 30-year fixed, 6.437, that was up. FHA 30-year fixed, 6.003, that was up. VA 30-year fixed, 5.703, that was up. USDA 30-year fixed, 6.089, that was up. Every one of them across the board up. Now, if you want our thoughts about the market each and every business day morning, as early as the data allows, we do put out a report, and it's free to you. You just have to go and sign up. rsrlinks.com/HBOD, Household Board of Directors. rsrlinks.com/HBOD. What are the markets doing today? Well, The Dow is up 195 points. The Nasdaq's up 248. The S&P 500 is up 47. And oil's up. Oil's down 48 cents a barrel. Yeah, we like seeing oil going down. Doesn't matter for us here in California. We're still going to pay too much. But the 10-year Treasury, that's up 3 basis points, 4.111. And I'm going to tell you, we're right there at a problematic area because at about 4.12, we're going to hit a Fibonacci retracement level. Don't worry about all the fancy words and stats and things. I watch that for you. But that if we break that, yeah, we might see that rise even further. If we hold, then we might go back and test that 4.00. The mortgage-backed security right now, returning the other way around. It's up 1 basis point at 101.04, which tells us that it's flat, so it doesn't really count. If it keeps going up, that's good news because that would mean the mortgage world is getting better. So let's break down what the Fed had to say yesterday from a combination of their reports and Jerome Powell.
Idiot.
Yes, I know. So the Fed cut rates 0.25% to a range of 4 to 4.25. The effective rate is 4.125. Powell said that policy has been clearly restrictive. Yeah, well, we know that.
Surprise.
Signaling that he believes the Fed has been more than just a little restrictive and there is more room to cut. Why didn't you do it, Jerome? The Fed said that economic activity is moderated in the first half of the year and that their focus has been on inflation side of their dual mandate, but now labor and unemployment are more in balance from a risk standpoint. 43 out of 50 states are showing negative labor markets. 43 out of 50. Where's Jerome on that one? Statement said that job gains have slowed and the unemployment rate edged up but remains low. Powell said the job creations are running beneath the break-even level, which is why the unemployment rate has been rising on inflation. Powell explained that it has moved up and remains somewhat elevated. Okay, he believes that 0.3% to 0.4% is due to the tariffs, but that's a one-time price increase, and the effects will be short-lived. He also mentioned that services inflation has been cooling. On the summary of economic projections, the Fed says unemployment rate remained at is going to be at 4.5 by the end of the year, stayed the same. Core PCE 3.1, GDP 1.6 from 1.4. The Fed funds rate 3.6 from 3.9. One wants to hike. Talk about a lunatic. Probably, my guess, because these are secret, probably Lisa Cook, because she's probably not very happy with the president right now. 6 want no more cuts. 2 want a 1/4 point cut. 9 want 50 basis points. And we can guess who said they want 125 basis points by the end of the year. Not going to happen. Initial jobless claims, BLS, again, always getting things wrong. They tell us they're wrong. Fell 33,000 to 231,000. Remember last week we had that 263,000 was the initial jobless claims. So that was not good news, but it kind of figured in some of the numbers from Labor Day weekend. You know, if you got laid off right before Labor Day weekend, were you going to spend the time going and filing for unemployment, or are we going to wait until the next week? We see what happens. Continuing claims of those continue to receive benefits after their initial claim fell 7,000 to 1.92 million people have been unemployed after they lost their initial claim. Ow! Yeah, that's not good news. That's the Mortgage Minute, brought to you by rsrlinks.com/mobile app. rsrlinks.com/mobile app. And don't forget also the new rollout from yesterday we told you about, rsrlinks.com/keysteps. rsrlinks.com/keysteps. And it's an app that everybody should have. If you want to monitor your budget, you want to monitor your assets, and you want to, most importantly, monitor your credit report and identity theft, go and register rsrlinks.com/keysteps. It is free to you. So why don't you have it? If you say that, you know, you were a victim of identity theft and you don't have Keysteps on your phone, I'm not going to have a whole lot of empathy because you would have known about it right away. Soon as that crook tried running your credit or ran your credit to try and get new credit against you, you would have got an email saying, Did you really apply for credit with Saks Fifth Avenue? If you didn't do it, you can start taking action before it gets too bad. But on another note, before it gets too bad, let's talk to Scott Hauser. He is with us this morning. He is a medical insurance expert. And I guess we got a lot coming up in this world of medical insurance over the next, 3.5 months?
About that, yeah. Starting in October all the way through like the end of January. It's going to get crazy.
So those people that got onto the Obamacare or the, what do they call it, the marketplace, what can they expect for the rest of this year?
Well, for the rest of this year, they better enjoy, they're probably getting what's called cost sharing reductions. So just like my family, no deductibles, and the feds and the state are kicking in a lot of help. And what the uncertainty and the fear is that as we go into 2026, those subsidies, there's a chance, there's legislation going on right now. The subsidies could be gone altogether. But more importantly, the cost sharing reduction tax credits also are probably going to be gone for sure. So that's going to cause a lot of disruption and a lot of what I call turbulence. I'm going to probably have a lot of my current clients and new clients calling and freaking out.
So here's here's a comment that I use all the time, and I think we might be able to expand it. So, there's no reason, there's nothing that says that we have to pay too much in taxes, right? So I come out and I say there's one tax code and two tax systems, one system for the informed and one for the uninformed. And I think that now that we're going into the medical insurance world, maybe it's going to be the same thing. There might be one code, but if you're not informed, you might not do as well as the person that is informed. Is that fair?
Yeah, I think that what we're going to see is probably premiums that have never been, presented before. I think in 2010 is when Obamacare rolled out. If you recall, there was a time when you had to qualify for an insurance plan if you had pre-existing conditions and what have you.
If you want to keep your doctor, you can keep your doctor.
Yeah, exactly. So where this kind of falls into my wheelhouse is that I think that the either the single person or the family of four that can afford insurance now is probably going to need advisement. They're probably going to need to maybe take a step down from maybe a silver plan to a bronze plan and allow me
Okay, wait.
Yeah.
You got to back up.
Okay.
We're simple people on Ron Siegel Radio.
Right.
A silver plan to a bronze plan.
Yeah.
Now, are we talking precious metals here or insurance?
No. So there are four in covered California in the marketplace. There's four metal tiers. There's bronze, there's silver, there's gold, and platinum. Anybody that makes probably 300,000 or more, which is a very small percentage, for some, they're looking at platinum and gold. Most of my clients are in silver. Silver is kind of like that mid-range, where you get all the flavor of a gold, but without the price tag. Lower copays, lower deductibles, things like that. Bronze is going to be for like your 20-year-old, your 30-year-old that really is healthy and doesn't need a whole lot of, they're willing to pay more, when they use the insurance, and they pay less for their premiums.
Because they're all invincible and they never have to go to the doctor. Exactly. Now, what we're talking about here, though, is we're talking about individuals. We're not talking about the person that's on group health through their company.
Exactly.
Okay.
Yeah.
So we're going to continue this conversation. We're going to learn, there's a lot of people that are self-employed and smart, and they understand. They're the informed people with the tax code, so they don't show a lot of income. I wonder if that's going to be impacted by what Scott's teaching us today. We'll find out. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? Are you earning a safe, secure 10+% return on your investments? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564. Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ. and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
Are you paying rent because you cannot afford to live in your dream home? Are you paying rent because you don't believe you have the down payment funds to purchase your own home? At Siegel Lending Team at ronismylender.com has up to $25,000 to help qualified people purchase their own home at amazing interest rates. Contact the Siegel Lending Team today at ronismylender.com. Again, ronismylender.com. Licensed under NMLS 217037. ronismylender.com.
Are you like many of your neighbors trying to figure out how to pay off your debts so you can retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis, rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by rsrmoney.com, rsrmoney.com. Do you know how much your house is really worth? Most people don't. Want to know something important? You probably don't have a professional check for you nearly as often as you should. Spoiler alert. It's the value of your home, because here's the reality. Your house is likely the biggest financial asset you have, and if you've lived in it for a few years or more, chances are it's been quietly building wealth for you in the background, even if you haven't been keeping tabs on it. You might be surprised by just how much it's grown, even as the market has shifted over the past few months. If you don't know what your house is worth legitimately, well, I'm going to tell you that you just have not taken action. rsrlinks.com/homewealth. rsrlinks.com/homewealth. We've talked about it many, many times on Ron Siegel Radio. We give it to you for free. It's just, another one of those apps that we have for you. And all you have to do is register, put your address in there, and once a month, we're going to send you an email with what the value of your home is. What is the home equity, though? The hidden wealth in your home is called equity. It's the difference between what your house is worth today and what you still owe on your mortgage. Your equity grows over time as home values rise and as you make your monthly payments. Here's an example to help you understand how the math works. Let's say your house is now worth $500,000 and you have $200,000 left to pay off on your loan. That means you have $300,000 in equity, and that's right in line with the typical homeowner has right now. According to Cotality, the average homeowner with a mortgage has about $302,000 in equity. That's a lot of money. Why you probably have more than you think. Here are two main reasons homeowners like you have near record amounts of equity right now. Number one, significant home price growth. According to the Federal Housing Finance Agency, FHFA, home prices have jumped nearly 54% nationwide over the last 5 years. Again, if you're watching us on RonSiegelRadio.tv, any of our socials, or the ABC News and Talk, AM 1490, FM 98.1 video feed, you are seeing a chart that shows the percentage of change in home prices. 41.4 is what that number says for California. This means your house is likely worth much more now than when you first bought it, thanks to how much prices have climbed over time. And if you're worried because you've heard prices are flattening or even becoming down in some markets, just know that you've been in your house for a few years or more. You likely have enough equity to sell and still come out ahead. Number two, people are living in their homes longer. Data from the National Association of Realtors shows the average homeowner stays in their home for about 10 years. Again, you're seeing a graph. Used to be 6 years for ages and ages. We talked about 6 years. Then we went up to 9 years or 7 years, 8 years, 9 years. Now we're at 10 years. That's longer than it used to be. And over that decade, you've built equity just by making your mortgage payments and riding the wave of rising home values, because the financial side of home ownership is about playing the long game, not worrying about little ups and downs in the market here and there. And over time, that means you're winning. So if you're one of those people who's been in their home for a bit, here's how much the behind the scenes price growth has helped you out. According to NAR, quote, over the past decade, the typical homeowner has accumulated $201,600 in wealth solely from price appreciation, unquote. What could you actually do with the equity? Your equity isn't just a number. It's the tool you can use to unlock your next big move. Depending on your goals, you could use it to help you buy your next home. I've told you 20 years and you can retire just by keeping your property, buying a new home, refinancing your departing property, buying another new home. Do it 5 times. Someone else is making your mortgage payments for you, and you keep getting bigger and bigger houses, building your wealth through real estate. Renovate your current house to better suit your life now. Or how about doing the debt consolidation loan? Get rid of all that credit card debt. rsrlinks.com/2step. rsrlinks.com/2step. And we show you how to do that. And maybe some of your refinances could be, no lender fees or more. Start the business you've always dreamed of. That's potential as well. Chances are your house is worth quite a bit right now. If you're curious about the values of your home, rsrlinks.com/homewealth. Give me a call. Let's talk about it. That's the Real-Time Real Estate segment brought to you by rsrlinks.com. rsrmoney.com. rsrmoney.com. Continuing our conversation, we are speaking this morning. Scott Hauser, he is the medical insurance guru, chatting with us today. And we're learning about medical insurance. And I guess we can, when Scott comes on, I guess we should just play a new theme song.
Surprise, surprise, surprise.
Or maybe you won't be surprised if you're listening and Scott's educating you. So, there was a number, I think it used to be around $30,000, $35,000. If your income was under there, you got a pretty good size subsidy, wasn't it?
It was, yes. Well, let's put it this way. If somebody is making more than $20,000 in California, they're going to get what, they call a Silver 94 plan, which is kind of like the cat's meow. They're pretty much paying $5 doctor visits, $8 specialists, co-pays are low,
If they're making $20,000, that's it?
Yeah.
Okay.
They got to make just over 20,000. The person making 30 to 35,000, again, these are people that don't qualify for group, or an employer plan. They're still in, this year, they're getting a lot of help. So they're seeing that, those cost sharing reduction plans. But here's the future. The future is the subsidies are probably going to be less. The premiums, without a doubt, are going up. And Ron, I just want to share some statistics with you.
Okay.
Washington. I do a lot of business in Washington. Those folks are going to see a 20% increase year over year just for doing business in Washington. New Mexico. I don't do business in New Mexico, but the people that have health insurance through the marketplace are going to see a 35% increase year over year in 2026.
Yeah, but you know something? I have some friends in New Mexico, and they laugh at us because the prices that they're paying for their health insurance there are so much less than what we pay here. I mean, I have a friend that's from New Mexico. She's still got a residence, but her boyfriend is here, and we compare some of the numbers, and she might be paying $30 for a drug, and he's paying $150.
It's crazy.
So going up 20% or 30%, whatever number was you said. Yeah, I'm not going to get him a tin cup.
Yeah, no doubt. And then California, which, we live in, we're not going to see the biggest increase because we're already paying a lot. So it's a 10% increase year over year for 2026.
So the sweet spot for business people that are listening, they want to be between 20 and 30,000. That's the idea to get the biggest subsidy.
Yeah. And if you're married, filing jointly, those folks are going to get a lot more subsidy as well. They can make, anywhere from like 50 to 60,000, still get a really good plan. What's interesting is this year you can make over 100,000, still get subsidies, but I don't think that's going to be the way it is in the future. I think a lot of those folks are going to be paying close to full price.
You know something? I might push back on you just with one conspiracy theorist because I am a contrarian. So do you really think that they're going to let these numbers go up too much in an election year?
Here's my prediction.
Okay.
This is my bold prediction. The subsidies will remain. The feds will the voting will probably keep those in place for another year because we always fear that the subsidies are going to go away, right? Well, they still need to vote on it, and it's coming to a vote right now. I think that the states also, each state will be able to kick in a certain amount of subsidies as well. So if the feds are not kicking in enough, California is going to be kicking in a lot of the difference.
Gavin has unlimited money. Just look at all the money he spends. That's my opinion.
Absolutely. So he thinks.
Yeah. Okay. So California, we're still going to get an increase. Just
yeah, it's not going to be as substantial as some of these other states. I mean, there's fear. There's uncertainty with the future, but with this big, beautiful bill, I think there's going to be tax breaks for those of us that are working hard. And then when it comes to certain plans, I think they're going to find that they're going to be paying what they were paying back before COVID. COVID, we were paying next to nothing. Now I think we're kind of paying the piper.
Now, there was something you mentioned to me, I think, and then maybe I heard it wrong, is you can have a insurance be on the state insurance and then get other insurances on the side. Is that did I misunderstand you?
Absolutely. Where I was going earlier was a lot of folks are going to be calling me saying, Scott, I need a solution. And my solution is going to be simple. Take a step down in whatever metal tier you're in, pay less in premium for that, and you'll pay a little bit more in copays and maybe have a higher deductible, but I can help them with supplemental insurance policies. There's accident plans, there's hospital indemnity plans, even critical illness. I mean, some of my clients have gotten up to $100,000 for cancer claims. So there's a lot more than I think a lot of people know exist out there. You can get a very inexpensive plan and fill those gaps with these supplementals, and you'll end up probably safer than paying a fortune for these very expensive plans that they're probably in right now.
That's fascinating because no one ever talks about something like that, and get ready for it, Josh, because it's coming. I talk about this in the mortgage world and home finance world, but I never thought of it or never knew about it in the world of insurance. Strategy beats rate always, right? That's one of our mottos here on Ron Siegel Radio. Strategy beats rate always. Now you go and you talk to Scott about some of these different things, and you might find out that, you're spending X amount of time, and I don't know what that is, but I know that you have to spend a certain amount of time learning all of these different insurance programs.
Absolutely.
As a radio host and liability advisor, consumer advocate, I can talk to you and get data, but I don't know what you know. Now, I've got some friends that are do all different kinds of businesses. They don't spend any time learning about medical insurance. All they do is, okay, this is what's put in front of me, and that's what I'm going to take because I don't know any better. Well, when you're uninformed, you got a problem, right? So that's what we're trying to do here on Ron Siegel Radio is inform you. And we're going to come back and learn more school with Scott Hauser when we come back. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. You can reach me anytime. Our off-air number, it's 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? Are you earning a safe, secure 10+% return on your investments? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564. Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ. and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
Are you paying rent because you cannot afford to live in your dream home? Are you paying rent because you don't believe you have the down payment funds to purchase your own home? At Siegel Lending Team at ronismylender.com has up to $25,000 to help qualified people purchase their own home at amazing interest rates. Contact the Siegel Lending Team today at ronismylender.com. Again, ronismylender.com. Licensed under NMLS 217037. ronismylender.com.
Homeowners over the age of 62 are taking back financial control after retirement with reverse mortgages, and the Siegel Lending Team is here to help you use it to your advantage. Call Ron Siegel with Geneva Financial to receive your free information booklet with no obligation. The booklet answers all your questions, and the best part is, you still own your home. Call Ron Siegel at 1-800-306-1990 or visit ronsiegelradio.com.
We're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio anytime at 800-306-1990, 800-306-1990. Borrow Smart segment today being brought to you by GetHomeSelect.com. GetHomeSelect.com. Still the best mortgage in the market. Hasn't changed. I've been saying it. If you have a 30-year fixed rate mortgage, well, you probably haven't been listening to Ron Siegel Radio, or you haven't got educated enough.
You know better than that.
Because a 30-year fixed rate mortgage is the most expensive mortgage in the marketplace. Yes, I said it, and I'm right. Now, the Home Select, highest interest rate, lowest interest expense. Think about that one. How about being able to pay off your mortgage in 8 to 10 years without having to make a larger payment? How about when mortgage rates went up on almost every product, the Home Select went down? How about that one? So think about that concept. Strategy beats rate always. And if you've got the wrong strategy, and I know a 30-year fixed rate loan is comfortable, but I still tell you about the friend of mine, very close friend. We've been friends for over 40 years. And we went and we changed from a 2.875% mortgage rate to a 8.33% on his Home Select loan, his all-in-one loan. And it's a $300,000 loan, so it's not a huge amount by California standards. A lot of money, not a huge amount by California standards. He's going to pay off his loan 15 years faster, and he's going to spend $70,000 less in interest. Oh yeah, he gets to keep all the liquidity of his entire value of his property. Think about that concept. Liquidity, safety, return. Can you ask for any more than that? Well, maybe you can talk about insurance, but that's a whole different story, and we're going to do that. That's the Borrow Smart segment brought to you by GetHomeSelect.com. Now, don't forget, you're going to learn about the Home Select, the all-in-one, at GetHomeSelect.com. But what you're going to actually go and do is you're going to go the next step, and you're going to monitor your credit. You're going to monitor your identity for identity theft. You're going to monitor your home value. You're going to monitor your budget, all by getting our newest rollout, Key Steps. rsrlinks.com/keysteps. rsrlinks.com/keysteps. If you haven't got it, it is free. Okay, so now let's continue our conversation. Scott Hauser's with us. And during the break, it's fun when you get to be in studio and you go on break. And I chat with our guests, and our breaks are not very long. But, remember I talked to you at the very beginning about you get the insurance for the informed or for the uninformed. Well, has anybody ever told you that you can get group health from your company? And maybe your company generally, most of the companies I've ever been around, you can get a higher insurance, a higher deductible policy for less money. Less money. That saves on your budget. Now, everybody I talk to right now, especially, says, Ron, budgets are tight. Well, that's because they haven't got Key Steps. They're not watching them. rsrlinks.com/keysteps. But so they think they don't have any options. So we're going into open enrollment for your group health. What if you got a higher deductible policy with a lower premium policy, and you didn't have all the bells and whistles of that policy? Now, can I call you, Scott, and see if there's a advantage to some of those secondary policies you just talked about?
Absolutely, you can. Again, as I mentioned earlier, I don't think this is the time to just have either an employer plan or an Affordable Care Act plan. There's just too many holes and gaps. And as you were alluding to, somebody in an employer plan can have some of these supplemental policies. They can have the critical illness that covers them if they have a heart attack, stroke, worst of all, cancer, and more. That's going to support them and pay their bills if they can't work. So those are super smart. The hospital indemnity plans that we offer, they also give you like diagnostic, cash in your pocket if you need like an EKG, an MRI, some of those very expensive scans. Not to mention emergency room visits, you get money for that. In addition to that, urgent care and much, much more. Surgeries too, up to $4,000. Imagine if somebody has out-of-pocket expenses, of course, with the surgery, they would get paid a lump sum of up to $4,000. And I know that would come in handy if that were to happen.
Okay, let's explain how that really works then in practice. So I go and I get this plan. Are those plans real expensive?
They're not.
Okay. So I go and I get that plan, and I've got a high deductible on my employer plan.
Mm-hmm.
And say my out-of-pocket this year is going to be $7,500.
Okay, great.
Now, I can get insurance to cover that 7,500. Is that it?
Absolutely. You can actually get more. So, one of the hospital indemnity plan we offer, that'll pay you up to $10,000 if you enter a hospital bed for one day. So one day you get a check for $10,000. I think that's going to cover your whole nut for the 7,500. Not to mention there's other layers and other riders as well. But yes, you can pick those up. They are very affordable.
Even for old people like me?
Even for people that are up there in age, yes.
I like how I said that, don't you?
They're very affordable. You can tell I talk to a lot of people. But certainly. And then, you can also take those into Medicare as well. And I'm in the Medicare space. So I help people.
So you can take that into Medicare.
Absolutely.
I can take it on my group health.
Yep.
I can do it on my covered California or affordable care plan if I'm not in California, because we have people listening that are not in California.
Yep.
Sounds like it's that. So here's the biggie, Scott, is I don't know what I don't know. So, when I get my group, when I get my group health offering this year, which I'm self-employed, so I don't get one, but I'm hypothetically, when I get my group health offering, how do I know what to do? Do I bring you that package or bring that to you and then say, hey, Scott, what's your recommendation? Is that how it works?
Well, I mean, like I said, I'm in 14 states. So I have people that are as far as Florida, and those folks, when they call me, if they call me, I can certainly do like a policy review, and I can share, this is what their coverages are. This is what we need to protect against. And certainly, as you mentioned, the high deductible plans are going to be lower in cost. There are going to be higher, copays and when you use the services, but it is not the time. I'm in a budget conscious family, right now. I mean, we just cut out Netflix and a few other things, just to make ends meet. I think that is the future. And that's going to be the direction that I go, is helping individuals and families protect themselves with really good supplementals to fill those gaps that their employer plans won't cover, or, when they have those out-of-pocket expenses.
So I want to throw this at you just because I'm going to use myself. So pre-COVID, I was diagnosed with a need for to get both my knees replaced. I didn't do it. I just put up with the pain, and I took a few extra drugs, and legal drugs, don't go there. Took some extra drugs, and the pain was manageable. Last year, the pain got worse and worse, and I said, okay, so I think next year I'm going to get my knees done. So I changed my California plan to a plan that I thought would be more suitable, and it tripled my healthcare insurance. I didn't have that done, and I've been doing some other holistic medicines or holistic treatments. Don't really need it now, so I'll probably go back the other way. But if I got one of the supplemental plans that you're talking about, I could go back to that lower cost plan for 2026, buy that other supplemental insurance, and if I end up needing that knee replacement next year, then I can still be covered with lower cost insurance. Am I getting this right?
You are getting it right. Now, they do a 6-month look back. So, if you were to pick up a policy, say today, Ron, in 6 months, if you got that surgery you needed, again, the max payout is $4,000. They even make it, digestible for others. You can get 3, 2, and even 1,000. But yeah, I mean, why not max it out if you know that you're probably going to get hit for quite a bit for a surgery like that?
So on the ACA plans, they all tell you what your family out of pocket is. So is that what your recommendation is in most cases? Just cover that family out of pocket, or is it per individual?
It depends. I mean, each situation and scenario is kind of different, I think. But if it is an individual we're talking about, let's say that their out of pocket right now is $8,500. I'm going to give them a lot of ways and a lot of solutions on how they can spend the least amount monthly and have the best protection against catastrophic events. And let's be honest, catastrophic means surgeries, emergency room, or hospitalization. And I have a solution for all of those, super affordable. And if you look at what it looks like from a bronze plan and those supplementals combined and put that up against a plan that they're paying top dollar for, hands down, it makes more sense to go with the lower cost, higher deductible plans and fill those gaps.
So what I want to ask is, you ever heard this before? Anybody ever tell you any of these things that we're talking to you about today on Ron Siegel Radio? I didn't think so. But that's why you tune in each day. And if you want to get more information on this, I know where to reach Scott Hauser, and you know where to reach me. So just give me a call at 800-306-1990, 800-306-1990. We'll put you in touch with Scott Hauser so you can be covered and get the best for your family. And as always, we ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean who are engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.